Wall Street just told the biggest lie in financial history. And if you believe it, you're about to lose everything. They're telling you the economy is strong. They're telling you to stay invested. They're telling you this time is different.
They're lying, and I can prove it with one number. 1 trillion. Yep, that's how much money people have borrowed to buy stocks right now. It's a record, higher than before the dot-com crash, higher than before 2008, higher than before every major financial disaster in American history. But here's what makes this lie so dangerous. They're not just lying about the market, they're lying about what happens when it crashes. See, when people can't pay back that 1 trillion in borrowed money, Wall Street doesn't just take their stocks, they take everything. Their homes, their cars, their life savings. And the worst part, most people have no idea they've even signed up for this. If you have money in the stock market, whether it's through a 401k, IRA, or a brokerage account, you need to understand what's really happening before it's too late.
$1 trillion? That can't be right. It's gotta be a data error.
See, that 1 trillion in margin debt is money people have borrowed to buy stocks that are already trading at the highest valuation in history. Now you might be thinking, okay, so some people are gambling with borrowed money. How does that affect me? Great question. Here's how. When those people can't pay back what they owe, it doesn't just affect them. It affects everyone. Because that 1 trillion isn't sitting in isolation. It's woven throughout the entire financial system like a cancer. And when it metastasizes, it's going to take down everything with it. Right now, as I'm speaking to you, the Nasdaq's valuation relative to GDP is the highest level in history. Higher than the dot-com bubble, higher than 2008, higher than any point in recorded financial history. Now you might be thinking, okay, valuations are high. The market's been there before, right? But here's the difference this time. It's not just that stocks are expensive, it's that people are buying those expensive stocks with borrowed money. That $1 trillion in margin debt. That's a record. A record. And like I said before, it's higher than 2008, higher than 2000, higher than 1987. And in 1987, when margin calls went out, people didn't just lose their portfolios. They lost their homes. But here's what makes it even more dangerous. Look, people don't even understand. They don't understand what they're exposed to. I'd bet if you asked 100 people with margin accounts, can Wall Street foreclose on your house if you don't meet a margin call? 90% of them would say no. They have no idea what they've signed up for. They think margin is just a way to buy more stocks. They don't realize they've given their brokerage the legal right to liquidate everything, including putting liens on their home. And if their account drops below a certain value, that's what they'll do. And when valuations are high, it doesn't take much of a drop to trigger those calls. But what's really criminal is why valuations are high. You see, the Fed keeps going on TV telling you that they're practicing tight money policy. It's a lie. M2 money supply, the actual measure of money in the system, just hit a new all-time high. They're not tightening anything. They're printing money faster than ever while telling you they're being responsible. Liars, liars, liars. And all that printed money is fueling speculation like we've never seen before. People are buying options that expire the same day they're purchased. They're leveraging themselves 10 to 1 on assets that they don't even understand. Companies are going from zero to billions in market cap overnight with no real business behind them. And while all of this is happening, the record margin debt, the insane speculation, the Fed, well, they're printing money while lying about it. There's another crisis brewing that almost nobody is talking about. Right now, as I record this video for you, 63 banks in America are sitting on 57 billion in unrealized losses. They're technically insolvent, But regulators are letting them pretend everything's fine by not forcing them to mark those losses to market. What happens when those banks need bailouts? More money printing, more currency debasement, more inflation eating away at whatever savings you have left. It's the same playbook they used in 2008, except this time the numbers are bigger and the lies are bolder than they were in 2008. And here's what really tells you everything you need to know about what we're heading into. Look when the people who control trillions of dollars are actually doing with their money. Watch what they're doing. BlackRock, the largest asset manager in the world, is quietly exiting private equity positions. Why? Because they need someone to sell to. They need bag holders. And who are they telling to buy private equity? Retail investors. People like you loading up 401ks with assets to the smart money is dumping. Meanwhile, central banks around the world, they're accumulating physical gold at record rates. Think about that. The people who print money are buying gold. What does that tell you about what they think is coming up for paper currencies? Stan Druckenmiller, one of the most successful investors in history, just publicly announced he's moving out of tech stocks and into tangible assets. That's a sign. These guys don't make moves like this for fun. They see something coming. So let me ask you a question. If the people who run the financial system are quietly moving their money out of traditional assets while telling you to stay in, what does that tell you? It tells you that you're being set up as a bag holder. Now, some of you might be thinking, Dave, you're being too extreme. Relax. The system has safeguards. Let me show you how a pattern from history that proves the Fed has done this the exact same way before. From 1978 to 1980, the Feds, the Federal Reserve, they told everyone they were fighting inflation by raising interest rates. Sounds responsible, right? Sounds familiar, right? But what they didn't broadcast is the fact that while they were raising rates, money supply was growing at double digits the entire time. They were doing the exact opposite of what they claimed. And what happened? Double-digit inflation. Double-digit interest rates. And here's the kicker. Treasury bonds, supposedly the safest investment in the world, lost 44% of their value. Not yield, price. 44%. The system didn't collapse. But what did happen was wealth got transferred from people who believed what they were told to people who watched what they actually did. And right now, the exact same pattern is playing out on a much larger scale. You see, back then, bailouts were measured in billions. Today, we're printing, wait for it, trillions. Back then, margin debt was a fraction of what it is now. Now everything is bigger, more leveraged, more dangerous. And here's the crucial part that most people miss. When this thing turns, and it'll turn, it's not going to happen slowly, I promise you. The algorithmic trading and computerized margin calls that used to take weeks will now happen in hours. As quick as that. Remember the 2010 flash crash? Remember that? The Dow dropped 1,000 points in minutes. That's the kind of speed that we're dealing with today. You're not going to get a phone call warning you. You're not going to have time to get out when it starts turning. You're not going to have that opportunity. The time you realize that it's happening, the exits will be jammed and your account will be locked. So, what's the solution? Well, I can tell you for sure that the solution isn't more diversification within the same corrupt system. The solution is getting out of that system entirely. While Wall Street tells you to buy and hold, index funds, max out your 401k, do all the things that we tell you to do, the wealthy are moving their money into something completely different. Assets that the government can't print, can't manipulate, and can't confiscate. I'm talking about private real estate investments, self-directed IRAs, hard assets that generate cash flow whether the stock market goes up or down. Think about this. When was the last time the government printed more apartment buildings? When was the last time they created land out of thin air? They can't. During 2008, while stocks got obliterated, people still needed somewhere to live. Real estate in solid markets held its value. In some, it actually increased in value as investors fled paper assets. You see, the wealthy don't get rich by following the same advice they give to everybody else. I'm sorry to tell you that, but it's true. Think about it. Every apartment building keeps generating rent regardless of what happens to Apple stock. Every piece of commercial real estate keeps producing income whether the NASDAQ crashes or it doesn't. That's how you build real wealth. That's how you protect your family's future. But timing matters. It matters a lot here. When margin calls start going out in the trillions in debt, when people are forced to liquidate everything just to survive, the panic will set in. And by then, it'll be too late to move your money. The time to act is now, while you still have options, while you can make decisions from strength instead of desperation. The solution to this problem is pretty simple. Start diversifying investments from corrupt exposed public assets like stocks, 401k, into private assets like self-directed IRAs and real estate investment strategies. Real assets, hard assets, assets that produce actual cash flow, not paper promises that vanish when the system breaks. Now, if you want to learn more about what your financial move could be right now, specifically tailored to your situation, then click the next video here. I don't know where it is, it's that side or that side, that's way above my pay grade, but I'm going to show you exactly how to position yourself before the crash happens. Because when those margin calls go out and Wall Street starts foreclosing on houses again, it'll be too late, my friends. It'll be too late. The choice is yours, but don't wait too long to make it.